Good afternoon, John here. And today I want to talk about gold. And gold has been down a lot this week, approximately $84 this week, or 4.6% approximately. And it's violated my key zone on the weekly chart. And we can see my weekly chart. On the weekly chart, my key zone held very well. It defended once, twice, and until yesterday. Look at this big bearish candle with the weak room here. So that marks the violation of the key zone. So which opens a new range. Okay, the new range will be between $1,680 to $1,756. So less than $100. So the reason why I make this new range is because this is flip. We all know that, right? This is also on a flip and have a quick retest. And this flip zone is kind of fresh, so that made the zone more reliable. And we also have the my long-term MA as a support level here. So this one is coming up. This one is coming up as well. So I guess the the zone around 1658 to 1680 will act as reliable demand zone. Okay, that's the technical analysis. Let's look at another chart. So this chart is the US 10-year yield. US 10-year yield is really now at the center stage that everyone pays attention to. So the orange line is gold price. The blue line stands for US 10-year yield. We can see clearly, right? Overall is negative correlated, right? And let's check the date. From August the 4th of last year, when the US 10-year yield reached the lowest level in history, almost 0.5%. Can you imagine that? You hold the US 10-year you hold the US 10-year treasury for 10 years, and it will give you 0.5% return. Can you imagine that? Consider the inflation. The real yield is definitely negative. All right, and look at the price of the gold. 2066 or 68, whatever. Yeah, I think that's also the historic level, right? And since then, the yield started to rally. And look at the gold price. Bam, there we go, all the way down. Now, the US 10-year yield has a pullback around key level, which is 1.50. We can see one. So this is definitely a key level pullback. So does it mean that the gold we have pullback as well to the upside? I leave a question mark here, because if we zoom in, look at the small time frame. Look at small time frame. Let's say from here to here, we can see the two assets actually is heading for the same direction, go up. All right, the yield go up, the gold price go up. But overall, we got to look at the big picture. Overall, it's negative correlated. So we need to look at the US 10-year yield. Now everyone is looking at the US 10-year yield. We can see how it impacted the growth stocks, the NASDAQ, as I explained in my previous video. Is so important. All right, so let's go back to gold again. Hold on a second. Should go this chart. Right. Okay, I think I got nothing to cover, because I also I plan to talk about this one. This is Monday, February 22nd. We got a rally. Now because it's got a lower low here. So inside of the big down, it's down channel. We got another channel. It's not a down channel, and then it's pulled back to the previous flip zone. You can see. Actually, I published a trading idea and set a target too long. I remember. I set a target around 1825. That's actually my target. The reason why is because I think this is the cluster of weeks here. So I think the price is very likely to test this level. But they proved that I'm too optimistic. And the price just reached the 1817, which is around here. Why 1817? Look at this peak. Look at this peak. Look at this peaks. All right. So look at those pivots, and so that might be the reason why. But this kind of a look back view. So on a smaller time frame, you better true your stops, because if you don't true your stops, you will be stop out. So this is why. And price goes rally all the way and form a structure here, break down the structure. Whoa! And now if you still hold a position, it's okay. And then guess what? Price closed below the 1 hour, my 1 hour long term MA. When it pull back, it's your last time to exit. If you don't exit, look at this all the way down. It didn't give you any opportunity to, good opportunity at least to exit. So just pay attention to the long-term MA. Once price close below the long-term MA, look for the exit opportunity when pullback happens. All right, so that is something I want to cover today. All right, I'm gonna stop here. Enjoy your trade.